Hi, welcome to the Market Alert for Thursday, the 24th of October 2019. So Bitcoin is moved lower. 7.5k Bitcoin's price tanks to 4-month low. So let's have a look, see what was going on yesterday. We'll start off with the daily chart. And you can see here the market going through all of the lows that I drew in the other day, all the way through every single one of them. But as you just saw, this all happened within 15 minutes. This wasn't a slow grind to the downside and an increase in volatility. It was just one huge sell or manipulative sell into the market, causing prices to move lower. Objective achieved. You can see them taking profits. And just to make sure before we move the market higher, we'll just test the lows and see if there's anybody else selling. Picked up all the other orders down at 7,298, well 7,300, and then the market has been sideways. So it's incredibly quiet in this part of the chart, and then all of a sudden the volatility picks up slightly, and then bang, and this is what I've been talking about in the last few days, that there's only one or two players in there at the moment, and I suspect these are serious futures traders, either on the CME, even up to the government. And there was an article out about the CTFC admitting to manipulating and bursting the Bitcoin bubble. If you want to have a search for it, you'll find it on the CoinDesk website if you do a search here of their manipulation of, or their admission of manipulation. Now, Bitcoin is a commodity, and under the CTF rules and regulations, they shouldn't be able to, or it's illegal. They shouldn't be able to. They do, but it's all right for them, and not for anybody else. Anybody else doing it would be sent straight to jail without passing go. So the pressure's on Bitcoin at the moment to the downside, and this is because they wish to accumulate, and you'll see why later on in the market alert. But at the moment it's still quiet, apart from these abrupt spikes to the downside or the upside. Secondly, stock markets. This is an interesting, this is not the main headline, I'll come to that in just a second. It says stock surge as Fed panics, dramatically increases liquidity provision. There's something going on in the background now with the Fed. It's unbelievable. As it says here that 60% increase in the overnight to repo liquidity from 75 billion to 120 billion. Now, this means that in the last month they've printed over 500 billion, and this is what the market needs to keep it afloat. This is pure manipulation of supporting the banks once again 10 years after, or 11 years after the last crisis. So as the main headline says, cryptos crash, black gold bid, that's oil, and lira lifted as yields, stocks shrug, whatever all that rest of it means. But are you not entertained? Well, no, not really. Because this is something that's been going on for the last 10 years. March 2009, they started to manipulate the markets with QE, and that's precisely what we have seen ever since. You can see this in this chart here. Go all the way back to 2009. In fact, let me just try and do it this way so you can see the whole picture there, and then just pull that down a bit and drag it over. So there you go. You can see that with the printing of 4 trillion, it's very easy to send it all into the markets. This is not growth. And also the other interesting thing when you look at this monthly chart is what I keep saying, that this market over the last few years, or since Trump got into office, is become a lot more volatile than the straightforward trend to the upside that you saw there. The last surge in 2016 at the State of the Union address is when the market was pumped up for the last time. And since then, it's just been sideways with some corrections. This one is when the Fed started to reduce the balance sheet, and look what happened to the market. It couldn't do it. So the only way you can keep this market going is to keep printing, and that's precisely what they're doing at the moment. However, if we look at the daily chart from the monthly chart, you can see that this market is just not making any new highs. The last one was way back in July, and since then we've had a rate cut, and we're seeing billions and billions printed. But for some unknown reason, the market isn't doing this, where it's going on to make new highs. So be warned, something isn't right. And when we look at yesterday's activity, even in the pre-market session, there was a bit of a shakeout here. You can see them buying back in, and then prices being brought back to the upside. We get above the 200 bar moving average in the pre-market session. We trade to the DP level, the daily pivot, and then the market manages just to move up to the 26,900 level before finding some weakness and then moving back to the downside there by 150 points, finding support, having broken the 200 MA, and you can see the buying coming in here, and then a retest on low volume, and then prices moving back to the upside, and then spiking up on the overnight. A bit of a gap up there, gaps filled, and the market's now sitting at the 200 MA. Today we have news, so the market's got something to react to. We start off with early morning news with flash news and Germany, and then we get into monetary policy statements by Draghi. This is at 12:45. This is probably going to be his last one, actually, because he clears off next week when they allow the convicted criminal Lagarde to take over. Yeah, you've got the ECB press conference there, so she'll be at the helm, having moved from the International Monetary Fund criminal syndicate for all of the banks. So yeah, let's see what happens. It's Draghi's last day, as it were. Implied volatility moving lower, which is great. The lower this goes, the bigger the correction is going to be. So this is fine by me. Keep the market treading more to get this to move lower, and then we'll get a really good correction, as we've seen before in these markets. And there you can see the visual of it, both below, sorry, the implied below, prices above the 20 bar moving average there. Whoops, you can't see that actually. Let me just drag that down a bit. There you go, now you can see it. So still above the 20 bar at the moment. 10-year yields, normal market now between the 3 and the 10 year. No surprise there with the amount that they're printing, and they're going to have to continue to do this to keep the banks afloat. So have a quick look at the pound, and then I want to finish off with another article. But the pound yesterday treading water because of the indecision, and frankly nobody knows what's going on with regards to Brexit, whether there's going to be an election or whatever. So the market yesterday really quiet, not doing a lot. I've just found support down at the 128.50 level. Very choppy, but then managed to start moving up as the dollar weakened and getting up to the 200 MA, but very quiet for yesterday. Not even a 50-point range in the main trading times, and overnight even narrower, as you can see there at the moment. Prices will need to stay above the 200 and the DP level if they trade down to them. I've also got support there at 129. So what would be good is to see the market come down, test at the DP level, see some buying, and then move back to the upside. If not, come back up, bang its head against here, and then move to the downside there. And then finally, the end of fiat. Absolutely, the amount of debt that's being printed, as you can see here, we've got, as it says, end of fiat in one chart. And what they mean by this is that for the first time in 21 years, Germany has openly bought gold into its reserves holdings. I wonder why. For the last few years, all of the other central banks have been buying gold like it's gone out of fashion, the highest since 1964. If you do a search for it, you'll see it. So here you'll see Germany now starting to buy the gold, and they can see, as much as anybody else with half a brain cell can see, that the grand experiment that was the euro and the European Union, as far as the economic side is concerned, I'm not interested in the political side, is nothing but a complete and utter farce that's been only survived on the basis of pumping more and more money into the markets. And they start next week with another 20 billion per month, which they've called well, they are calling it QE, but it's Q infinity, which means they're going to do that every month until they no longer need to do it. So as soon as you see the German central bank, the Bundesbank, buying gold, you know that they're starting to protect their backsides, because they can see, as like I say, with anybody with half a brain cell, Brexit or no Brexit, that the European Union is doomed as an economic powerhouse. Well, it isn't a powerhouse, as a trading place, because like I've said before, you can't keep printing. At some point someone's got to pay the butcher. Simple as that. And it says here, with the ECB mutiny and Deutsche Bank's rapid demise, fears are rising of a looming financial crisis. There is a looming financial crisis, up to $500 billion already printed in the US to keep the banks afloat. As it says here, that they've already repatriated 583 tons, or 31 billions worth of gold in 2017, years ahead of schedule. I wonder why. Which came after Germany's stunning announcement in 2013, guess when they started printing, 2014, that the Bundesbank would repatriate 674 tons of gold from the New York Fed and the French Central Bank, which was initially abandoned in 2014. So, as it says, of course, while Germany is now the latest to turn to gold as a safe haven store of value in its reserves, it is not the first, as the de-dollarization shift has been accelerating within recent months, which you can see there, and gold reserves moving higher. So we have a global financial crisis en route, and yeah, I mean, I've spoken about it for years, and I will be right one day. Can't tell you when it's going to happen, but you only have to just peel beneath the layers, and you'll see exactly what's going on. Yeah, so the rest of it very, very interesting. And also here, when you look at all of those countries that have dominated with the sovereign reserve and sovereign currency, you can see how long it lasts for. And there's the reign of the British Empire, when we had the reserve currency, and ever since earlier than 1925, or maybe 1925, I can't remember, but certainly from August 71, when the gold standard was removed, it's allowed global printing of money, digital money, that is. And yeah, it'll end at some point. There's no doubts about it. And then there'll be a global, either a reset or a new currency that will be a global currency to overcome all of these problems. And no doubt, given that all of the central banks are busy accumulating gold, it'll be have some sort of gold backing, not 100%, but to give that confidence back to a market that is failing dramatically. Okay, on that cheery note, forewarned is forearmed, as they say. Yeah, let's see how things pan out today, but keep these bigger picture moves and what's going on in the background as well. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.